Several stocks in the US market have recently experienced massive crashes. However, billionaire Ron Barron believes this may be the perfect opportunity for investors to make huge returns. Join us in today's video as we discuss Ron Barron's perspective on the markets and why he believes now is the perfect time to invest. The upbringing of Ronald Stephen Barron, better known as Ron Barron, is the subject of this video, which will detail his rise from poverty to wealth. Using careful stock selection, Barron was able to grow his initial investment of $1,000 into a fortune of several $billion. Because of his brilliant stock picking strategy, his $60 billion portfolio has consistently outperformed 99% of all funds managed on Wall Street over the past 3 years. Ron Barron is well known for selecting stocks that have gained 50 times and 100 times their initial investment. Many people have taken notice of his latest interviews, where he talked about his next 50-time return stock pick and how investors should start investments early, although with minuscule quantities. Investors who follow his 50-time stock picks and put as little as $300 to $600 per month into those picks stand a chance of becoming millionaires within the next 7 years.
I didn't realize you have 12.8% of your assets under management in Tesla at this point?
Yeah, because it went up 20 times in the past 2 or 3 years. If you might remember, when I was on initially and I was describing the investment, I said I thought we would make 20 times our money in this investment. And what do you know? We invested $380 million, and between 2014 and 2016, the average price was then about $40 a share, and we've made about $1 billion, about 20 times so far. So we made about $6 billion so far. We sold about $1 billion worth of stock.
Just because you didn't want it to be an even bigger position in the portfolio?
Yes, well, what it was is that I was getting widely criticized for having such a large percentage of my assets in 2 of our mutual funds, Barron Partners Fund and Barron Focused Growth Fund, in one stock. And people said, how can you be so crazy? And so I wanted them to think I wasn't crazy. I know I'm crazy. but they didn't want, I want to be responsible to people, and I didn't want people to say, he's lost his mind. And even though I think for Tesla, this is the very beginning of what they're doing. I mean, they just reported numbers a couple of days ago, and they said that they did 310,000 cars in a quarter, in the 3-month period of time, 310,000. General Motors did 24. Not 24,000, 24. Sure. And I'm a huge fan of Mary Barra, and I think she will be successful, and they have this cruise inside of it that I think is going to be a very cool business, and we're an investor in Cruise through her private company. But where was I?
Well, just in terms of what will you do next? So you think GM will be successful too? You think this is just the beginning for Tesla, meaning what?
Yeah, so they did 310,000 cars in the quarter, and people said, well, they should have done 317,000 cars in the quarter. And but at one point, the plant in China was closed for about 4 or 5 days, and there's supply chain problems in this period of time. And so everyone's focused on this quarter for 310,000 cars. In 4 years, 3 years, they're going to be doing $1 million a quarter, not 310,000, a million cars a quarter. And if you go 10 years, they're going to be doing something like 5 million cars a quarter. So here you are doing 310,000 cars, and people saying a few thousand more, a few thousand less. I'm thinking about in 8 or 10 years, this is 20 million car company.
You expect to still be an investor in 8 to 10 years?
Yes.
Are you selling any more shares?
Periodically, if people say, if it gets crazy big relative to the size of the fund right now, then I would. I own 1 million quarter shares for our firm in the company. I have not sold a single share of that, and I don't expect to.
Okay.
In my lifetime.
In your lifetime, you don't expect?
In my lifetime.
Okay.
And the same thing with SpaceX. So I think we're going to make 3 or 4 or 5 times our money in the next 10 years in Tesla. And I think it's
again, from on top of the 20 that you've made.
And in the case of SpaceX, I think over the next 10 years, we're probably going to make 20 or 30 times our money.
New Jersey is where Ron Barron spent his entire childhood, as well as his entire life. Barron was rejected from medical school, so he enrolled in a law school. However, interested in pursuing a career on Wall Street, He quit law school when he was only one semester away from completing his degree. Between the years 1966 and 1969, Barron held the position of financial analyst at a number of different brokerage firms. A critical piece he wrote against a company that appeared in the Wall Street transcript led to his dismissal from Janney Montgomery Scott after just 1 year. A short time later, he formed a partnership with a classmate from law school to offer research to institutions. He eventually established himself as one of the very few investors to have amassed billions of dollars through the stock market. His stock investment yielded a profit of $4,000 on a startup capital of $1,000. Consequently, he acquired the moniker Count. In 1982, he launched his own company, which eventually became known as Barron Capital and is renowned for the long-term strategy it employs with regard to the picking of stocks. Because of its strategy, the organization today manages assets totaling $60 billion, a clear indication of its success. According to data that was provided by Bloomberg, Barron Partners Fund has surpassed 99% of its retail counterparts over the previous 3 years, while the Barron Wealth Builder Fund has fared better than 90% of the competition during that time frame. Both funds are managed by Barron Capital Management. According to the most current list of the wealthiest people in the world that was released by Forbes, Barron is listed in the top 700 billionaires in the world with an individual net worth of $4.5 billion. Ron Barron was one of the few experts that maintained an optimistic outlook for Tesla. Ron Barron accurately predicted that Tesla Incorporated would become one of the largest corporations in the world back in 2016. One of the most significant investors in electric vehicle manufacturing at the time was his company, Barron Capital Management, which had a 1% investment share in the firm during the period in question. Even though the investment returned a profit of $4 billion, Barron feels that it is just the start and that he has a bright future ahead. The S&P 500 index has dipped below $3,700 for the very first time since December of 2020 as a result of the current stock market turmoil in the United States. In Barron's opinion, the present sell-off in key US stocks indexes like Tesla should be taken advantage of because it has dropped the S&P 500 to its lowest point since late 2020. In an email sent to CNBC, the founder and chief executive officer of Barron Capital stated that this is a big opportunity to make a purchase that only comes along once every few decades. Barron made a parallel between the current situation and his early years in business when he first started Barron Capital in 1982 for the purpose of illustrating his point. He made the observation that the beginning of the 1980s was yet another case of markets falling as a direct consequence of an aggressive Federal Reserve, which was seeking to keep inflation in check during that time period. The economy's technological foundation, according to this prominent investor, shows that long-term returns are likely to be large. This foundation has been built up over the past 2 decades, according to him, and he suggested that this will result in substantial future profits. Barron mentioned companies such as Tesla and SpaceX as examples of the type of enterprises that could be the driving force behind the next era of technological advancement. Barron predicts that Tesla's gigafactories in Texas and Brandenburg, Berlin, will be fully operational by the end of the next 5 years. At this rate, Tesla will produce 5 million automobiles per quarter, essentially making it larger than Toyota and Volkswagen altogether. At least according to Barron's assertions in an interview with CNBC, Barron Capital will make 3, 4, or 5 times its initial investment in Tesla over the next few years. In answer to a question regarding whether he intends to retain Tesla shares for 8 to 10 years, Barron responded, yes. Despite this, Barron Capital has only just offloaded somewhere around $1 billion worth of Tesla stock. Nonetheless, the corporation made certain to inform CNBC of the deal. Despite this sale, about 12.8% of Barron Capital's investment portfolio is still invested in Tesla, amounting to an astounding $6.2 billion. Barron told CNBC, "I was getting widely criticized for having such a large percentage of my firm's asset in one stock, and people said, 'How can you be so crazy?' I wanted them to think I wasn't crazy," Barron said as an explanation for why he sold a chunk of his Tesla stock. Following criticism of Tesla's production, where the business managed to build 310,000 electric vehicles, falling short of 7,000 vehicles, Barron declared that in 4 years, they will accomplish 1 million vehicles each quarter, and if you look out 10 years, it's around 5 million vehicles per quarter. He went on to argue that if Tesla's automotive company produced 5 million cars every quarter, or 20 million per year, it would be roughly the same size as Toyota and Volkswagen altogether. Since the price of Tesla has dropped by 50% from its all-time high of $1,243, we believe that now may be a great moment to invest in the US stock market and Tesla in particular. Do you guys agree with Ron Barron's take on Tesla? Which stocks do you guys think is the best investment right now? Comment your insights in the comment section down below. If you enjoyed this video, kindly like and subscribe. And we'll see you on the next one.